one of the number one questions is how long are energy prices likely to remain high? So in 2025, Sam, we saw the same conflict. Did it have the same impact on prices? Why is that impacting our prices so much with everything that's going on over there? As the weather warms up and we need less gas, will we expect prices to drop? What about storage levels? Does that mean that prices are going to remain elevated? Other than the situation in the Middle East, are there any other summer price drivers that we should be looking out for? Hi Sam, so the summer outlook has just been published, so thank you so much for taking the time to talk us through it. So we've got some key takeaways that we'll try and run through today. So Sam, let's make a start. We've been talking to a number of our customers and TPIs, and as you can imagine, one of the number one questions is how long are energy prices likely to remain high?
So unfortunately, we don't have a crystal ball, so we can't really say that the main impacts that we've seen from this conflict has been disruptions to the global LNG market. So we've seen the closure of the Strait of Hormuz, and we've actually seen damage to LNG facilities in the area. Now this is going to be priced in for some time and will keep prices elevated. Even if there is a ceasefire, the damage is already done with some aspects of it. So I said the damage to the LNG facilities. We're expecting a loss of 17% of Qatar's LNG exports for the next 3 to 5 years. Even if the war does end as well, it would take a few weeks for production to ramp back up. On top of all this, we do have, we're in a bit of a difficult situation with storage as well. So all of these are going to contribute to elevated prices, at least in the near term.
So in 2025, Sam, we saw the same conflict. However, it didn't escalate that time. Did it have the same impact on prices?
Really good point, Faye. When we compare the two, they are very different. Last year, it was only lasted 12 days. This year, we're getting on for 6 weeks now. The concerns were the same. So the concern was about the Strait of Hormuz and LNG facilities in the area. Unfortunately, this year they have materialised. So it was slightly different last year. It came to a kind of an abrupt end, and prices fell off as de-escalated.
So Sam, a lot of customers are asking why are we still paying so much for power in the UK when we generate so much from our own renewable sources?
Good question. The reason we still have to pay significant prices for power is down to what's called marginal cost. So the power price is set by kind of the most expensive form of generation, even if there's not a lot of it being used at that point in time. So you can have days where significant renewable generation, but even if a little bit of gas is being used to generate power, that will still set the prices. And obviously with the conflict going on in the Middle East, gas prices are remaining elevated.
So another question, Sam, is when we import very little LNG from Qatar, why is that impacting our prices so much with everything that's going on over there?
Yeah, that's a common misconception. Qatar makes up 20% of the global LNG supply, so losing that is impacting markets globally, and big reductions in supply like that means that prices have to push up off the back of it. What it means for us is, even if we're getting LNG from the US, which we commonly do, we're still having to pay the global market price for that.
It's interesting you reference the USA. As I understand it, we're getting more of our LNG now from the US. How does that impact our prices?
Yeah, so the US is a major player in terms of LNG exporters. They're the biggest in the world, which is quite impressive considering they didn't export anything 9 years ago. Unfortunately, that's not helping lower gas prices in the UK. We still have to pay the going rate for LNG, even though it's coming from a completely different source.
Can we not reduce UK energy prices by getting our gas from Norway?
So Norway is a significant source of supply for us here in the UK. We currently get 35% of our gas supply through pipelines from them. But unfortunately, similar to the previous question, we have to pay the global kind of market rate for those, which at the moment is being propped up by the conflict in the Middle East.
And there's a lot of talk at the moment around our own domestic gas fields in the North Sea. What about those?
Yeah, so in the North Sea, there's currently 14% of gas remains kind of commercially viable, but there's just other issues with that, being kind of the time it takes to get operating in the area, the expense, and then obviously it's going against a lot of kind of sustainability targets we have here in the UK.
Sam, are there any other markets then closer to home where we could source cheaper power or gas?
So yeah, an obvious one to me is in France, so where they have a significant fleet of nuclear power plants. Off the back of that, they can send it all over Europe, and they do send it to us via some interconnectors. With that, we also have significant renewable generation, as we've already spoken about, which is set to expand over the coming summer. Both of these can help to reduce our demand for gas and hopefully try and bring down power prices.
Sam, you mentioned the summer there. As the weather warms up and we need less gas, will we expect prices to drop?
Yes, the demand will typically reduce over the summer. We don't have any gas for heating demand, which we do experience over the winter, but we do have increases in demand in other ways. So typical one being gas for cooling demand. When it's really warm, you can see significant demand off the back of air conditioning. We don't get it so much in the UK, but we do see it a lot across Europe. This year as well, another factor which might prop up European demand is our storage and the situation we're in this year.
And how does that compare to last year?
So at the moment, current forecasts are suggesting slightly above seasonal normal, which is similar to last year. But these longer term forecasts, we kind of take with a pinch of salt. They'll become a lot more accurate the closer we get, so the picture will improve.
You mentioned storage, so what about storage levels? Sam, does that mean that prices are going to remain elevated?
Yes, storage levels and where we are this year are likely to kind of contribute towards elevated prices this summer. We've had a winter where we withdrew very heavily, and we're now at the lowest level we've been since 2021 across Europe. So it gives us a big challenge to try and fill up ready for next winter. And what that means for prices is it links back to LNG. So we need to attract all this LNG over to Europe and the UK in order to fill up. To attract it, we need to pay a premium, and off the back of that, it's going to be likely that prices remain elevated.
Other than this situation in the Middle East, are there any other summer price drivers that we should be looking out for?
So yeah, there's a few that I've previously mentioned. You've got the weather, the storage situation, and for the French nuclear fleet. The one concern with that in particular over the summer is when we experience warm weather in Europe, we see an impact on them. When the river temperatures are really high, generation from these nuclear facilities reduces as they rely on river temperatures for cooling. Another one will be to monitor LNG facilities in the US. As previously mentioned, we're quite reliant on them now, so any disruption there is likely to cause implications and likely drive prices upwards.
So Sam, I'm conscious that the outlook is focusing on wholesale costs. However, as you can imagine, customers are talking a lot about non-commodity costs, given it makes up such a huge proportion of the energy bill. Is there anything in particular that we should be monitoring, or customers should be monitoring around non-commodities? Yeah,
you're right. Non-commodity costs make up a significant proportion of our customers' bills. And while I don't deal with it specifically, I'm in a wider team which does cover the non-commodity costs. So while clean power is a good thing, a lot of the cost of that is going to land on businesses. Currently, the estimated price tag is £60 billion, with this April additional costs coming £26 per megawatt hour to customers' bills. So we did do a webinar last week which covers all of these costs in a lot more detail, but we'll provide a link which you can have a watch of that and find ways in which businesses can mitigate these increased costs.
Sam, thank you so much for your time today. It's been really useful. I'm sure any business that sees this will really benefit from the insight that you've given, and will be a lot more informed going into the summer months. So appreciated.
Thank you.